Hey, what is up, everyone? Wow, the first question is, will you be buying any shares of Coinbase? Okay, wait. Before I get to any of that, there are three things I want to cover today. First, I want to talk about the Bitcoin flash crash, and then I want to talk about the flow-on effect to Coinbase, and then I want to give a brief update on the stock market and just my general views around it. But if you do have any questions, just leave it in the comment section below, and I'll try and go through them as much as I can towards throughout the stream. I'll try and go out. I'll try and go for about say half an hour to 45 minutes today, and then yeah, we'll see how we go. Okay, let me do my compliance stuff. So before so whatever I say in this video, this live stream, is not financial advice or recommendation to do anything. It's just general information for entertainment purposes. Okay, so let me quickly bring this baby up. I know this will be a bit hard to see, but by now you would have heard a lot about how the Bitcoin have plunged to about 50,000 USD over the weekend. This is the only crypto asset I pay attention to, by the way. I don't pay attention to anything else. And I'll talk about why in just a second. So you can see this massive candle down at the moment. So I think it closed just a little bit above 50,500 USD and quickly rebounded back to about 57,000, 56,000 USD per coin. Now, the only reason why I pay attention to this is that for many of you who have been following me for a while, you will know that I dedicate a small percentage of my portfolio to Bitcoin. And when it did crash to about 50,500, it caught my attention. But just to show you my Bitcoin portfolio as well, it's about 4 to 5% of my portfolio, and it's worth about 7,000 Australian dollars at the moment. I use CoinSpot for my crypto exchange. But that's a personal preference thing. There's no real advantage, at least not that I know of. It's just easy to use. And frankly speaking, I don't include this in all of my portfolio updates, mostly because I've never really included my Bitcoin position in my portfolio update. So I didn't really want to just like add in the Bitcoin position just to make my portfolio look better. So that's why I've never added it in. And same with the Bitcoin and the thumbnail as well. The thumbnail number doesn't include the Bitcoin position. But for those of you who've been following me for a while, you know that I do have a Bitcoin position. So in saying that, when Bitcoin did crash, briefly, very quickly overnight, I went digging just in terms of trying to understand what exactly happened. I think it's important to note that it's very hard to pinpoint exactly what caused the crash, but I think I have a few observations. I have a reasonable understanding of what might happen, and let me know in the live chat, if you're more into crypto than I am, and you can potentially tell me whether I'm on the right track. So let me start with the liquidations. And I follow an account called bybt.com. It's like an aggregated data platform where they track the liquidations of different cryptocurrencies. I really don't look at anything else besides Bitcoin, so I don't care about anything else. So when the big transactions happened, when a lot of Bitcoin was liquidated over the weekend, it turns out that quite a bit of transactions actually happened on Binance. And for me, I'm not a Binance user, so I wasn't actually aware that on Binance you can actually leverage up to 125 times. So let me just pull up the. Actually, I can't find it. I think I accidentally deleted it. Yeah, so I believe that it's 125 times. And they wrote an article on that, and I was surprised at how much leverage they could actually get, and so that was super interesting to me. So when they liquidated it, I think I try to reflect on what has happened over the past couple of days to see whether there are impacts on that, like what potential news have impacted the price of Bitcoin. Because if you leverage 125 times, and granted that I think that they'll have safeguards in terms of who can leverage that much, the price doesn't need to move that much before you get margin called, right? So there are a couple pieces of news I think have contributed to that. So let me share that with you. So one of them is the political decisions across the world between Morocco and Turkey have essentially banned the use of crypto currencies for payments, and obviously Bitcoin being one of them. And if you look at the timing on April 16, 2021 at 6:52, you look at the prices. This is kind of how you gauge, right? So April 16-ish. So it's somewhere around here that it experienced that kind of correction. So the price have started to drop. But at the same time, if you just drag a little bit further, so on April 14th was the Coinbase IPO, and I really think that the Coinbase IPO have drawn a lot of attention to crypto, and not to mention that Bitcoin has already gotten a lot of attention. So it kind of really just pushed up higher and higher, or maybe you could argue that it's actually Bitcoin dragging Coinbase higher. But regardless, we're at an all-time high, and if you do have traders at 125 times leverage, some of these small movements will be kind of enough to trigger a margin call, right? So that's one, and I think that it's probably have contributed it, but I find it really hard to believe that that's exactly what caused it. Another piece of news is that on the 17th of April, there was some disruptions in China in terms of one of the coal plants went under, paused. And one of the things that for those of the crypto nerds, you will know that quite a bit of power consumption is actually done in China. Like a lot of the hash rates, which is the computation for Bitcoin, is done in China. So imagine one of your main source of Bitcoin miners go down, then the price will reflect that. And it kind of did. I'm not going to go back to the pricing, but you'll find that if you look at the timing of when this was released, you can see movement starts to happen during that time, right? And then there was more speculation around how there was a tweet by FX Hedge essentially saying that the US Treasury is going to charge several financial institutions for money laundering using cryptocurrencies. Now, firstly, this is a tweet. A lot of people have quoted this tweet as a cause for some of the plunge, but we don't even know what the source is. The only reason why I follow FX Hedge is because some of the investors that I know are relatively, like some of the great investors I follow this Twitter handle. So this is the only reason why I'm paying attention to this. But take it with a massive grain of salt, because sometimes the news source on Twitter, the quality is quite poor, and you have to fact check some of these sources, right? So I'm kind of just going to ignore that. So my thesis when it comes to the Bitcoin plunge is very much, if the traders are massively leveraged, then I think that small price movements will be enough to trigger a margin call. And I think that from all-time highs, the couple of news pieces that followed after the Coinbase IPO might have triggered a margin calls on some of the highly leveraged traders. And I've kind of wrote down my thesis here that it's just, I think the over-leveraged traders on different platforms are just being margin called. And this is kind of that correction that we saw. So we'll just go back to the chart. It touched 50,500 very briefly before it bounced back. Yeah, so there was a lot of volume being sold. But you can also see the demand coming up here as well. I'm not a technical guy, so don't quote me on any of the technical stuff. But I'm honestly just trying to do some research to understand exactly what happened to the Bitcoin price. But what's more important is that Bitcoin is closely related to Coinbase. That's one of the reasons why I'm interested, right? So going on Coinbase. Now, Coinbase went IPO on the 14th, and it was the initial issue price was, I think, $250 per share. And it just skyrocketed to 400. And then it just slowly, people were selling, right? There was a lot of speculation, observation, just drama around people offloading their shares, and, influencers saying that, hey, the chief product officer have offloaded a lot of these shares. And I know where this screen share is from. The screen share is from Open Insider. And if you go to Open Insider, type in Coinbase, you can actually see exactly who sold. Now, this is where I think the misrepresentation is. So you got to bear with me for a second here. Okay. So if you look at this, and you look at the influencer, they're saying that CFO have dumped 63%, 86%, blah, 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 blah. And you can see why that is concerning, because when you have senior executives dumping that many shares, you get pretty concerned, right? But at the same time, wait, just bear with me. When you're working in a startup, a lot of the times, a lot of employees are compensated with stock options to make them feel like they are part of the company, they own part of that company, right? So it's important to give them shares. And these direct listing and IPO is a liquidation. It's a liquidity event that allows people to sell their shares to actually spend some money, because you actually can't spend those stock options, right? So I don't think there's anything wrong with startup employees holding stock options, selling some of those. I don't think there's anything wrong with that. But this is where things get really out of hand when it comes to misrepresentation. So you can see here that, say, I'm going to do an example. So let's say the chief product officer, Surajit, I'm going to butcher the name. He supposedly, according to Open Insider, have sold 97% of his shares. Oh, crap. Sorry. Sorry. So for Open Insider, you can see that there's different delta of ownership. Delta just means change. And you can see that like the chief product officer have sold 97% of his shares. And this is where things get a little interesting, right? Okay, so this is not the original source of this information. And the best source of information that you should go to is you go to SEC, and then you type in coin, and then you find the transaction form for that person to see exactly what happened, right? So if you dig a little deeper, right? So this is that. So this is the transaction I'm talking about here. This one right here, right? So if we look at this, and on the outside, you're like, okay, so he's dumped quite a lot of shares. Fair enough. But firstly, this is also a direct listing, non-traditional IPO. So no new shares are created. The employees have to be willing to sell in order for someone to buy, right? But more importantly, if you look at these shares, the shares are first acquired from employee stock options before it's sold, right? So they sold, yes, the chief product officer sold 160,000 shares. But if you look at his remaining stock options, he has almost 2 million shares left. So this is where the misrepresentation is, right? When we look at Open Insider, it's like, holy crap, the chief product officer sold majority of his shares. That's scary, right? But if you dig a little deeper, I just don't think that's true. He's got so many more stock options that he can potentially exercise, buy the shares at $18 and then sell, but he's choosing not to, right? So if he sold 160,000 shares and then get to 1.8 million, it's just such a small percentage of his total ownership. On top of that, okay, let's talk about the co-founder as well. So the co-founder, Brian Armstrong, supposedly, according to Open Insider, have sold 71% of his shares, and that's quite a bit of money. Firstly, my concern whenever I'm looking at these is that it's very hard for a co-founder to offload that many shares without trigger like warning signs. So I was quite concerned when I first looked at this without digging into any further that like, why would Brian sell so much of his shares? Makes no sense. So when I dug deeper, I look at the transaction form, and this is Brian's transaction form. And it seems like, yeah, he did sell, but what's missing here is that how many stock options shares does he actually own? Because surely that's a very small portion of what he actually have. So one of the easiest ways to check is you go to the S1 of the company. And one of the easiest way to find the S1 of the company, you just type in Coinbase plus S1. And that's basically the filing that tells you everything. The ownership, the capital structure, earnings, etc. It's all in here. And it's a great crash course on crypto assets too, and how exchanges work and how they make money as well. So if you look closely at this, it might be hard to read. Let me zoom in a bit. Crap. Now I lost my place. Give me a second. I might zoom out a bit more just to find it. Sorry. Oh, okay, here. You're gonna have to bear with me because if I zoom in, I'm gonna lose my place again. So if you look at Brian Armstrong, Class A shares are traded in the publicly. Class B shares are not traded publicly. So you can see here that he has 2.7 million shares and he has 36 million in Class B. So with him selling about 750,000 shares, it's not a big deal. Like it's actually not a lot of shares. And this is not even taking into account his future stock options that will, be available for him to exercise in the future. So what I'm trying to get at is that whenever, and I did talk about using Open Insider in one of my videos in the past because I think it's a really useful tool to see what positions are insiders potentially buying. I'm really interested in that. But whenever you're looking at these charts, please do take everything with a grain of salt, especially this part right here. So Delta owned. So the changing ownership, please take it with a massive grain of salt because this is such misrepresentation. And then when you have a massive influencer spreading like misrepresentation, it really doesn't help. So I don't think the situation is as bad as what other people make it to be. But I do think that the correction in Bitcoin and also the speculation around insiders selling will probably have a downward pressure on Coinbase. But yeah, like this is something that I talked about in my Discord server this morning, because I discovered that, and I really don't think the media has done a good job in talking about coverage on this. So yeah, so please, whenever you do your own due diligence, go to the right source, which is SEC, and go read the SEC S1 filings. It usually tells you the best, most accurate form of information. Okay, so on Coinbase, I already talked about what I think is going to happen. And the last thing I want to cover is briefly just about the markets. There was a question around. I might answer some questions first before I talk about what I think about the markets. So Keith asked, "Will I be buying any shares of Coinbase?" I will see. I'm not honestly in a rush at the moment. I'm just trying to manage my portfolio responsibly. So I will definitely see. Ermi have asked, do I think a correction is coming soon in US and Australia? So with the correction side of things, in my previous streams, I actually mentioned that I didn't think that our correction have ended. I think there's more to come, and the scary thing in April is that new inflation data will be released, and because of the base effect, people will be like, "Oh my God, inflation's out of hand," and people will freak out. So I do think there's probably more to come, and honestly, that's not a bad thing, especially for us as well. Like inflation is, depending on what kind of inflation we're talking about here, but it's generally a sign that our economy is recovering. So it's not necessarily a bad thing. And a correction is also good for people like us who, have a long investment time horizon. So I don't think it's a bad thing. I think there's probably more to come. But it's all about being prepared for that. And it also doesn't change the fact that a crap investment is still a crap investment. Depending on the macro environment, doesn't change, your fundamental research. So that's really important. Julius has asked, newbie investor here, what do you think is the benefit of having multiple brokerage accounts? You have CMC and stake, have self-wealth. Honestly, that was more of a personal preference thing. So when I got stake in June last year, CMC didn't really have a free brokerage option, and everything was still very clunky. Only towards the end of the year, things suddenly changed, and then CMC really picked up their game. So for me, it wasn't a conscious choice to have two brokerage accounts. It was just stake was really helpful when I had it, and CMC was really affordable when I first got it. So kind of happened by chance. So there's no correlation of hash rate and price of BTC. Yeah, cool. Just going through the rest of the comments. Some comments around Doge. I don't know anything about Ripple, to be honest, just because I mentioned that I only follow Bitcoin. Anything else, I still have a lot of learning to do. For Hades, I know you have a crystal, no crystal ball here, but it's hard to say. No one knows whether the bull run is going to continue or crash. To be honest, I think the most important thing is being prepared and have a well-rounded portfolio to help you deal with things. And for me, I'm not really counting on timing the market. I just want to make sure that if a crash comes again, I'm ready. When the pandemic crash happened last year, I was ready. So that really helped me. Sound logic, short supply. Okay, cool. Just curious, how does your portfolio change going into a high inflation environment? So the interesting thing is when I started investing, I was mostly invested in just three things. It was VTS, which is basically entire US market, and then Argo, which is basically a selected high quality Australian stocks. So that's really good. If you think about Australian stocks, there's not that many choice here. It's mostly banks, industrials, materials, mining. So it's kind of beneficial with my when it comes to high inflation environment. And I'm really glad that is my foundation of my portfolio, so that even if I head into a high inflation environment, yes, I have growth stocks, but I have a big cushion of Australian stuff that's helping me out. So I'm really glad that I have a diversified portfolio and not overly concentrated in a few positions. But I think that also speaks to my greenness when it comes to investing, because Warren Buffett had that school of thought, like depending on who you speak to, there's a school of thought that like, high conviction picks and, and then you go all in. But for me, I think I'm still very early in my investing career. I'm not quite confident to take those kind of shots just yet. Internet bubble questions. So firstly, I think that when it comes to like, whenever we're talking about the tech bubbles, first thing is I was really young when that happened. So I had to study, history in terms of what exactly happened. And I think the scary thing when it comes to, institutional investors explaining to me what the tech bubble was actually like, a lot of these companies like had no revenue at all. It was just like burning capital. And to me, that's like super scary. And it's very different compared to today. Like when we're talking about the tech companies today, internet is matured. Some people might argue it's not, but I argue that it's more on the mature side. And then you have a lot of the tech companies like Amazon, Google, Facebook. They're generating tons of cash flow. So I think the times have changed. And in saying that, I'm not saying that there isn't a probability of a big correction coming, and the valuation is high. So let's talk about that. When we talk about ASX 300, we have not recovered back to previous heights at 7,092 points. I think we're at 50. We're almost there. And to be honest, I feel honestly really fortunate to be Australian because one, I feel relatively safe here, and two, a lot of our Australian companies will do pretty well, in my opinion, when it comes to inflation, especially our mining sector. So that's good to have. Definitely, I feel super fortunate to have some ASX stocks in my portfolio. When it comes to S&P 500, this chart looks so incredibly insane. Like the recovery from the pandemic crash to about like previous heights was just a few months, and honestly, that was a bit scary. And and I know that like, value investors talk a lot about, Shiller PE, et cetera, et cetera. It's important to pay attention to Shiller PE, especially moving forward into the next couple of months, because this is not taking into account the earnings that's about to come. So let's pay attention to what the earnings will do, because if the earnings are really great, and I anticipate them to be great, then the PE should pull back a bit and not all the way up. But yeah, so I'll keep an eye on that, definitely. At the same time, I pulled up this chart. I talked about this chart like a few videos ago, where I was essentially saying that, okay, so if you look at the environment here, we are definitely not in a low and falling inflation environment, definitely not in a high and falling inflation environment, definitely not in a high and rising inflation environment, but we're in a low and rising inflation environment. And it hasn't really happened all that often. And if you look at the asset classes that have done really well during these periods of low and rising inflation environment, there's only a few asset classes, right? You have equities, growth, value, small cap, emerging equities. The one thing that I'm not doing a great job in, and I can at least admit to that, is I'm not doing well in REITs, because I think I have some in my, in my ETFs. I have very little commodities, which could be a concern, and I have no gold. You could argue that there might be some gold miners in Argo ETF, et cetera, and that could be considered as gold. But I swapped this for Bitcoin. So that's something that I think I've done a reasonably good job in. But I am very heavily invested in equities, growth. I have some in value as well. So I'm still very much a work in progress. But let me sum up the whole market side of things. So I think that with a rising interest, rising inflation environment, I think we shouldn't be scared that a crash could potentially come, because I know that most of you watching are kind of in that 25 to about 35 to about 40 range, right? Age range. So given that our time horizon is long enough, I'm honestly not afraid. I'll be ready. I want to be ready when that thing crash again. So that'll be, that I have the opportunity to buy. At the same time, in terms of like comparing this to the tech bubble, I don't think it's a fair comparison. And I think that when two different eras, and the technology itself have matured enough that there is a market for a lot of the tech that we have, and a lot of the tech companies are actually generating cash flow. And I think that's a big difference between like 2000s and like now. Yes, but there are kind of bubblish elements of the today's era. Like, for example, some of the EV stocks are incredibly hot, where no cars are being kind of produced, and they're getting like crazy valuations. Like, for example, CCIV. I know some of you will bring out your pitchforks and like scream at me for that, but look, I really think that some of the EV stocks are like incredibly richly valued with no cars produced. Like, that's scary to me, right? So that's pretty scary. And also like the whole GameStop situation, that's super scary to me too. And of course you have Doge, which is like a meme stock and people piling in. but yeah, that's a completely different conversation. So let me go through some of the rest of the questions and see what else if I can answer. Okay, so Voyager Digital. So yeah, I haven't dug too deep into Voyager Digital. I'm not even sure if that's available in Australia either. Any opinions on Tesla? I'm thinking of investing. Well, can't actually give investment advice here, but solving the money problem, talks so much about Tesla. He's probably one of the best source. Dave invests as well. Shout out to those guys. I love them a lot and I watch them. But for me personally, I invested in Tesla like middle of last year, and people laughed at the idea of like, oh, this is crazy overvalued, blah, 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 blah. It's a car company. Their batteries is not an advantage, blah, blah, blah. So you got to study. And I think by studying, you have that information advantage. That's for sure. Yeah, so can't say too much beyond that. Thoughts on derivative markets and real estate becoming token? Is that real? Like real estate becoming tokenized? I'm not aware of that. If that's real, that's pretty cool. I'm trying to study a little bit more about NFTs, and because I don't really understand it, I don't want to comment too much about it. When it comes to the derivative market, I'm hoping there's more kind of transparency around it, especially with the whole total return swap situation with Archegos. Imagine that a company or a family office is holding significant leverage positions on like different stocks. I think you will take that into consideration, right? So let me scroll down a little bit more onto other questions. Sorry, there's quite a bit of comments. Give me a second. Hi, Ben. What is your view over the short term of ethical stocks or ETF? I need to study a little bit more about that because when it comes to ethical stocks, we have to understand like what's the filtering criteria for that to go into these funds. I haven't studied enough to kind of give you an educated observation. Yeah, so not too many comments on that. What are my thoughts on convertible? Convertible bonds. I mean, well, this is the thing. I'm a retail investor. It's very hard for me to get access to convertible bonds. I'm not even sure if we can actually buy them. So yeah, so can't comment too much about them. I mean, the only time I've learned about convertible bonds is like in finance assignments. Other than that, like that wasn't exactly an option for me to think about. Any thoughts on GameStop? So far, not too much. Other than I'm watching from the sidelines. Don't ever plan to put money in that at the moment. I'm trying to be more sensible with my investment decisions and try to not follow the herd too much. That's important. What's going on with DNT? Buzz a flatline. What I think about cybersecurity stocks, seems like share price have been stagnant. I think the important thing when it comes to like cybersecurity companies and share price of these companies is that it's important to remember that, like, fundamentally speaking, are they generating value? Are they getting customers? Are they retaining their customers? The share price will be a lagging indicator of how well they actually do. And of course, if they do, like, the thing to think about is that, like, if they do a good job, media will eventually pick up on it, and then the share price will be reflected on the good job that they're doing. So I try not to worry too much about share price, but at the same time, you have to do your due diligence on that. Because for CyberSec, I'm only looking at CrowdStrike and Zscaler. Anything else is just, I'm not even thinking about that. Hey Katrina, thank you. Do you have any opinion on LICs on wax trading on pre? It seems like they've always, like a lot of the listed investment companies seems like always be trading at a big premium to its NTA. So I was really fortunate that when I started investing, it wasn't. Maybe it was, I don't really remember, but the market the pandemic crash kind of gave me a chance. So I just poured. Yeah, I just invested a lot in it. But most of the time, I think these investment companies will tend to trade at a premium, but you have to do your due diligence on the listed investment companies itself, right? So if you believe in the management, you believe in the team that kind of helps you sort through a lot of the investments and also manage the team, and manage and navigate the environment, then that's a choice you got to make. But for me, I've done that research with Wax, and I feel super comfortable with those guys over there. So shout out to them. Do I have any further thoughts on Talga? I know that they recently got the release and announcement, and it's so interesting that like when I read it, it seems like a neutral release to me, that they are just talking about their progress overseas, and the share price is doing its thing. So no further thoughts at the moment. They're chugging along, and you got to give them some time, to execute on the on what they're supposed to do. Have I heard about Dogecoin? Of course I have. Who hasn't? But I'm trying to be sensible. I'm trying to be really, really sensible with my investment decisions. So less of the gambling at the moment. Thanks, man. After early videos of yours, DDR has been a winner for me. Do you think return to work will affect companies like DDR? Actually, no, I don't. So if you think about what DDR does, Dicadata does a lot of reselling for both equipment and also I think enterprise software as well. So don't quote me on that. But yeah, I think that it's almost like Salesforce. Like if you think about Salesforce, like people treat it as a tech company, but like, a lot of our businesses are powered by Salesforce. Imagine like when we head back to work, it doesn't make sense to me that like they'll be impacted. Same thing with Amazon, right? Like, the whole opening trade, it doesn't make sense to me that like one of the biggest revenue drivers for Amazon is AWS. Do you really think that people going back to work will, people will stop using AWS? That's crazy to me, and do you really think that like people going back to work will stop, the need for convenience, better pricing for a lot of the products? No, like makes no sense. So sometimes it's better to like pay attention to what people are saying and ask yourself, why would that be wrong? The biggest concern right now is inflation. And I think it's unwise to not think inflation exists. I think that inflation has been around us, more than you think. But at the same time, inflation is a pretty tough concept to understand, and it affects everyone very differently. Okay. So opinion on Buzz. I sold Bitcoin and bought Dogecoin. What is your opinion of, well, it's a lot of comments around Buzz and Dogecoin. I'm not aware of Buzz and Dogecoin at all. What's my opinion on investing in big four banks? So the thing about big four banks, especially in Australia, is that with a rising interest rate, people think that, okay, so that would be great for the net interest margins. And I agree. But what's really interesting about the big four banks is that if you think about it properly, they have sold off a lot of their different arms, like wealth management, funds management, and a lot of the different portfolio of assets that they have, and they're quite concentrated in real estate. Because look at Westpac's books, it'll be mostly mortgage loans. That's where they generate their revenue from, right? So given where where housing is, especially in Australia, which is quite hot, it's quite hot in the US too. So I'm a little bit wary of putting that money into the big four banks. Yeah, I'm concerned because it's so concentrated in real estate. On a separate note, I think that, I look at Macquarie very differently to the big four banks, because Macquarie is very heavy on infrastructure projects. They help and finance infrastructure projects. That's their bread and butter, especially M&A as well. So such different models. And I think that, I'm a lot more interested in Macquarie than the big four banks. That would be my answer on that. Thank you, Keith. Thank you. I sold Bitcoin and bought Dogecoin. Troy. I have no idea what Troy is. So before I wrap up, I wanted to ask you guys, is there anything else I should read up on in terms of, if you have any other questions, by the way, let me know in the comment section below. And I will really appreciate it if you could just gently smash a like button, because that will help this live stream to get out to more people. And yeah, and if you do have any more questions as well, just drop it in the live stream. And the final comment I wanted to wrap up on is, whenever media feeds you a headline, you want to be aware of what exactly is their agenda, well, to get you to click, but also how accurate is the source of information. Because recently, Tesla had an accident with the supposedly it's autopilot, but it's actually not if you read into it more properly. So it's important that whenever media feeds you headlines, you got to be careful of what you're consuming, when you're consuming it, and what is the accuracy of the source. And the second thing I wanted to point out is that I'm still a work in progress. I document a lot of my mistakes so that, firstly, I don't make that mistake again myself. And hopefully, by sharing my mistakes, you can potentially learn from me and not be an idiot. And I think the last thing I want to say is that thank you so much for the support. It means a lot to me. And yeah, if there's any content pieces you'd like me to do on the channel in the future, whether that's crypto related, stocks, even macroeconomics, just let me know. I'll try my best to get them out as much as I can. There's a question about A2. Yeah, like, look, the whole thing with Tesla is that, like, media feeds on these like negative headlines that, like, oh, these people passed away because of so and so, and then it's supposedly autopilot is on. But is it really on? So we always have to ask those questions, right? And YouTube sometimes doesn't do a good job either, because I know that there are a lot of market crash videos and housing, like the market is going to crash by 90%, so on and so forth. For me, I live for those events. And now, without dragging the stream any longer, I know that you guys always want to see Otto before I leave. Oh, there we go. So as usual, thank you so much for this, for being here. And Otto will always do the honors, and see you next time. Oh, that's scary. Okay, there we go. Oh, I got to get my angle right next time.